Most people who invest in crypto do so as individuals, and adding crypto onto a company's balance sheet is quite different, with many people not really understanding this. So I wanted to put together some videos for you looking at holding crypto through a company rather than as an individual investor. For example, looking at what the implications are, the rules, the advantages and the disadvantages of this. This is part 2 of these videos, so if you haven't watched the first part, I've included a link to that here and in the description of this video, so you can check this out first. And I'm really pleased to be able to welcome on this video Joe David, who's the CEO and founder of one of the leading crypto accountancy firms in Minor, which is part of Nephos Group, a wider professional services business that offers tax, accountancy, wealth management, restructuring, offshoring services, etc. And it's great to have Joe here to share his expertise with you. If you are interested in getting specific crypto tax advice or any of the services that I mentioned based on your personal circumstances from one of the best crypto accounting firms around, then I've included a link in the description to this video to contact Joe or Jamie at Minor or Nephos directly. You just need to make sure you put my name and YouTube channel in the online inquiry form, just so they know where you've come from. So please do like this video and subscribe to the channel so I can continue to offer more content for you in future. Just a reminder that nothing contained here is financial or tax advice, and let's jump straight in. How would someone go about reporting the crypto? Thinking like to HMRC on a balance sheet or whatever it is. Are we looking at an asset, an intangible asset, a liability? How are we reporting it?
Yeah, so this does depend. And, I did say at the start that I would caveat every question, and I'm basically doing that now. But this does depend on the situation and also, again, going back to the intention of what you're doing. So I'm going to be super broad with these statements because it is a very specific situation. But if, for example, we can take us as an example as an accounting firm. We take crypto as payment from our clients. Typically, that's in stablecoins, but it could be in Bitcoin or Ethereum or many different tokens. We report that as a current asset. So effectively alongside things like cash, inventory, debtors, all those things, and without getting too technical, that sit within that kind of day-to-day business operations pot, if you like, because we receive the funds, but then we use those funds we pay some of our team in crypto. We pay some of our suppliers in crypto and, things like that. So for us, we're not holding it for investment. We are receiving it as a currency, if you like, and we are then using it as a currency. So whilst we can't recognize it as money specifically, we have to classify it differently. We are able to say, well, actually, this business is using this from an operational perspective, like day-to-day business operations, and therefore it becomes a current asset rather than an intangible asset. If, however, you, for example, buy some staked ETH and you want to put that in a pool on Lido where you want to receive some yield from that, and your sole intention of buying that asset is to generate a yield from that holding of that asset, for example, then that might be an intangible asset, which is held slightly differently in your company's books. And also valued quite differently, which is the difference and why you might use one or the other. I won't get into the technicals, but that is two, if you like, very broad examples of where they might sit in different places. When these kind of things initially happened, especially in the US, they were very adamant that crypto was an intangible asset, and an intangible asset is something that you can't touch or feel and brings future economic benefit to your business. This, in one sense, it is that. But on the flip side, it may not be, because there are so many businesses now that use crypto in their day-to-day and aren't holding it for that investment perspective. They're holding it, or they're buying it, or they're receiving it because they want to use it in the ecosystem and send it around the world, like we said earlier, or pay staff, or buy that coffee, or pint down the pub.
Yeah, that's brilliant. Thank you. I was thinking about those last few. Expenses. If we're adding crypto into our balance sheet, what expenses can we deduct?
Yeah. So again, that really depends on the situation. So if, for example, I'm holding some USDC on my balance sheet and I'm using that I've received that from a client, I'm then using that to pay my staff or to pay for, my office or whatever it may be, then any reasonable cost that it is incurred in the spending of that, or the sending of that, so transaction fees and whatnot, would be deductible as normal. As mentioned, the valuation techniques are very different from intangibles to current assets. So I don't want to get into the boring part of that, but there are differences, which is why people would do things differently potentially. But yeah, any, I guess, reasonable cost that is incurred, a bit like if I go on my banking app now and I send, $5,000 abroad, there's going to be a fee to do that. That's deductible on my business because it's a business transaction. So yeah, in terms of what's deductible from a general perspective, I would say that. If we then put that into, okay, we're running a protocol, then there's probably a lot more expenses that can be incurred that are in the crypto world because, you are solely, that is all you're doing as a business is solely operating as a crypto company. So we talked before we came live, or not live, but on video, was that wholly and exclusively, which is the word that HMRC use. I said to you, directly attributable. Effectively the same thing. Is it that this cost is directly attributable to the crypto actions that you're taking, and are those crypto actions in the best interest of the company? If those things align, there's every chance that you can deduct the costs incurred on that.
I was just thinking, because it's easier as an individual to look at, I think, directly attributable, wholly and exclusively part of the crypto. If you've got not maybe a large, but if you've got a medium-sized company, it's a bit harder to attribute that if you're taking payments if it's just sat on a balance sheet, then you don't have that many expenses. But how about something like an accountant's fees?
Yeah.
Because that would be a small part of larger equation. Are you taking a bit of it, or?
So, I mean, what I would say was, ultimately, again, it comes back to the valuation techniques as partly as well as to how we get to a particular value. And for example, when you buy a property, if you're buying that property as an investment property in a company, there are certain things in the purchase of that property that can be capitalized, as we would call it, on the balance sheet and held as a fixed asset, a tangible asset. And in this case, there would be a potentially similar situation where if there was direct cost towards that intangible asset being purchased and put into the particular platform or whatever it may be, then yes, they would be attributable. What you wouldn't be able to do is find a figure, so let's say the accounting fees, and then say, well, 10% of that was because of the crypto. You wouldn't be able to then capitalize, if you like, 10% of that cost because you wouldn't be able to identify it. So it's kind of like saying, as an individual, I work from home, so I want to deduct all of my electricity. Well, I can't deduct all of my electricity because I also live at home and I also, use it for personal. Okay, well, how much do I use it for business? Okay, that's now arbitrary. That becomes a bit more difficult. And for limited companies, it is quite difficult to attribute personal home office expenditure against your company because it can be quite difficult to understand that. So it's the same here. So, if your accountancy fees have increased, so let's say you were paying £1,000 for fees and now you're paying £2,000, that would just be a generic cost of the business. That will just come off your P&L as normal. The fact that it's increased because of the crypto doesn't really matter. And that's where this value, if it's a current asset held as, with this kind of day-to-day business operations, the costs as such don't matter because they just all sit in the profit and loss account, and it makes no difference anyway. If you're trying to value something as an intangible asset, then you may want to increase the value of that so that when you dispose of it, you have a higher cost base to offset that against. And that's where things might get a little bit more complicated.
Well, that's amazing. Thank you. It's quite complex. This is why you do what you do.
Yeah.
And I'm sat here asking the questions.
100%. And the key thing as well, though, is a lot of this stuff is not rewriting the rule book, right? A lot of these things have been around for a long time, just in a different format, different asset class, like we say, property, or, now the key thing for us is that we really do understand the crypto market. So we're able to apply some of those principles to the crypto market because we understand the concept of, investing in DeFi protocols or whatever it may be. So we're able to go, okay, so if that's what we're doing here and that's what we would do over here, how does that apply how do we maximize the opportunity for you over here? So that's the main difference, is our kind of understanding of the crypto market. But a lot of those principles are very similar and have been around for a while.
Yeah, that's really interesting. And you talked before about a company maybe taking payment and maybe paying staff. And if we think about taking payment, so if you, I don't know, for whatever it is, good service, what example you used was USDC, I think, but it doesn't matter. But if you're receiving USDC, I presume, well, obviously you're invoicing, but how does that work on an invoice, for example? Will you?
Yep. So, again, if I sent you an invoice in pounds, but you have your money in dollars or euros, or, I'm in the UAE, so dirhams, I would send you an invoice in pounds because I'm a British company and that's how I invoice. And if you're a foreign company, you might pay me in that foreign currency, depending on your banking situation, or you might just pay me in your local currency, and you would convert it, or the bank would convert it. You'd say, I'm paying £6,000, and the bank would say, okay, well, that's $8,000 or whatever the number will be. Effectively, think about it in the same way. So when a client wants to pay us in crypto, there are a few tools you can use these days. You can invoice in with these certain tools. One of them is called Request Finance. There's another one called Actual. And when you invoice in these tools, you can say, I'm invoicing in pounds, but I want to be paid in US dollars. And then, in USDC. And then when that person gets the invoice, the system effectively is doing that calculation for you using CoinMarketCap or something like that to pull the pricing. So then when you click pay, it will say, okay, the equivalent of that £6,000 is 8,000 USDC. So please prove the spend of 8,000 USDC, and it will transact it and send me the 8,000 USDC. So in that sense, it's no different. That's why I use the currency kind of, foreign currency FX situation at the start, because people get very, it's crypto, it must be really complicated. And I'm like, well, actually, no, it's very similar, because typically a service or a product or whatever you are providing will have a value in the fiat world, because that's how 99% of the world operates. So you simply really need to apply that fiat value that you've applied to that service or that good, and then apply that to whatever asset it is that you're receiving. If it's Bitcoin, what's the current rate of Bitcoin versus the fiat currency value that you've applied to it? So yeah, it sounds complicated, but it's actually not that complicated. And like I say, there are tools now that will do a lot of that part for you. There's a few services I pay for that bill me in dollars. And then when I go to pay with Bitcoin, it will say, well, that's 0.003 Bitcoin, press accept, and it will send it. So yeah, that's the big kind of takeaway I've got. That's really incorporating it into the traditional accountancy kind of mechanism, really, which is really interesting. Again, just thinking more like a UK company, what costs do they have, as it were? So if you're paying your employees, so you've received it, you're holding crypto, and then you're using that and you're paying your employees using crypto, do the usual rules apply? So national insurance contributions, all of that kind of stuff. Yeah, so the usual rules apply. So again, we go back to that invoice scenario. You raise an invoice, you send the invoice. Customer says, "I want to pay you in crypto," or "I want to pay you in magic beans." And if you're willing to accept whatever that person's willing to give you and put a value on it, then there's nothing. So the difference, I guess, with legal tender and not legal tender is not whether or not you are allowed to accept it; it's whether you have to accept it, right? So the difference with pounds in the UK is that pounds is legal tender. So a shop cannot refuse to take, GBP in a shop because it's legal tender in the country. In El Salvador, in principle, where they've made Bitcoin legal tender, the theory is that people can't refuse to accept. Now, some of that's an infrastructure piece that they may not be able to or what have you, but in principle, legal tender means you have to accept it. So the difference in this case is you can accept payment in a sense in whatever you want. As long as it's declared, that's fine. So it's the same with an employment perspective. Employment will be run through your payroll system as normal, £10,000 salary, tax, national insurance, all those sorts, pension if you're registered with a pension. All those things are deducted. And then there's a figure at the end, £5,000. And at that point, you will say, okay, £5,000 is what I'm going to be paid in fiat. I want to receive that in Bitcoin. So therefore, that is X amount of Bitcoin. And then that gets transferred to you. So the concept is exactly the same. It's just that end point when you say that part, I'm going to pay you in, fill in the blank. That's the kind of situation.
Yeah, that's perfect. So incorporated again, really, in the normal system, as it were. I'm guessing VAT is the same. I'm guessing it's just been transferred into fiat value, like GBP in this case, and then that's just incorporated into the revenue of the company.
Yeah, so most countries where taxes like VAT or whatever, and the UAE is the same in this as well, require you to report, when you report your kind of VAT, they require you to report it. And a tax invoice is typically only valid if it reports your local currency as well as the currency that you are receiving as payment. So in the UAE, if I send an invoice to a UAE-based client and I'm invoicing them in dollars, I have to have the dirham equivalent on the invoice for it to be a valid kind of tax invoice, right? So the same would apply here. From a VAT perspective, you need to make sure that all the tax invoice rules that there are apply. Assuming they do, VAT is due as normal. The fact you're paid in crypto is irrelevant to that part of the conversation. It's again that point of everything else is done as normal. What are we going to get paid in? That's the difference.
Yeah, I do remember reading somewhere Bitcoin exchanges are exempt from VAT.
Yeah, so VAT is actually quite complex when it comes to crypto, because whilst I said earlier that a lot of the generic rules apply in these other taxes, VAT is always quite a difficult tax to apply in cases where it isn't obvious whether it applies or not, if that makes sense. So yeah, at the moment, a Bitcoin exchange or a crypto exchange, in the same way that an FX exchange would also not be a VATable supply, if you like, it's not a VATable. Now, if, for example, I was a broker and I was being paid a commission for facilitating that exchange, that's different because I'm providing a service, which is probably a VATable service, and therefore that would apply. So yeah, there's a lot of things like trains, for example. Train travel is an exempt supply for VAT. So again, the crypto version of that would follow the same rules if there was one, right? It's just quite often when we talk about, let's say, a DeFi protocol, it can be quite challenging sometimes to go, well, are they a bank? So do the bank rules apply? Are they a software provider? So do software provider rules apply? Or, there's all these different nuances. So that, VAT does come in a slightly more complex way because there's so many different angles to VAT where things are VATable, not VATable, exempt, zero rated, all these different things. Whereas with corporation tax, typically it's, this was my revenue, these were the costs, this was my profit, I'm taxed on that figure, so it's a very simple, in inverted commas, calculation, whereas VAT can be quite complex. So yeah, it's definitely crypto mining is another one. What are you doing as a crypto miner, and therefore does VAT apply? So yeah, there's a lot of different nuances, I guess, around crypto and crypto specific businesses and how the potential VAT applies.
Yeah, and I suppose it's every jurisdiction, every country has its own tax rules.
Yep, unfortunately so. Yeah. And it's not just that. It might be that actually you can't, from a regulatory perspective, you actually can't operate in that particular country. So even if the tax did apply, you couldn't operate there. So therefore, how can the tax apply in a place where you're not actually able from a regulatory perspective? So there's those things as well to add into the mix.
I've been on a few calls with a few people that are in the process of setting up crypto exchanges or have done so, but have started off only, for example, as a Bitcoin exchange because it's a bit easier in terms of a regulatory perspective. And then they're looking to branch out, and it is a minefield in terms of where they can legally branch out and the steps they need to take, and then the tax reporting of it.
100%. Just to finish on that as well, if I can, if we just take an NFT project for a second. So let's say that NFT project is providing a utility, and that utility is access, or that utility is, so I've got an NFT project that I'm part of that offers a concierge service as part of the offering, right? So you buy the NFT and you get access to the concierge offering by buying the NFT. Effectively, in that scenario, what you're buying is a concierge product. It's just packaged as an NFT, right? So that typically, in a lot of cases, might fall under VAT if concierge services was a VAT supply in normal circumstances, because there's no real difference between the two. The only major difference is your gateway is not paying them X amount per year. Your gateway is buying a tokenized version of that. So in that scenario, VAT may well apply. If I've got an NFT project that is, it's solely around, there's no real value to it. It's only there to, for future speculatory increase. Maybe there is no VAT because no physical service has applied. So I think it's important just to add that. I appreciate I probably just added a few more questions than actually answers on that. But The reason I wanted to add that was we're talking about the same situation, so an NFT project, and we've got two different applications of that potentially in that rule. So it's also just worth thinking, it's not just I'm an NFT project, the answer is this, or I'm an NFT project, the answer is that, or I'm a this project, the answer is that. So yeah, no,
that's brilliant. I would just say if anyone's watching this, because Joe's adding a lot of detail and it's amazing, but if it is a bit complex, or if you're coming away with it with questions, just add them in the comments, and Joe and I will have a look through them. We'll get back to you. We can jump on another video in future and maybe cover them then. So it's a perfect opportunity to have a dialogue between us maybe. But yeah, you mentioned a mining company before, and I've had this conversation with Jamie in terms of an individual, which came back to the wholly and exclusive thing. So electricity costs, because obviously if you're doing that as a company, then I suppose it's the same thing if you don't have a home computer or one mining rig in your home, versus you are a crypto company with a bank of resources for it. Is that?
Yeah, and especially these days, if you're mining Bitcoin, you typically haven't got one little computer sat in your bedroom that's, you're probably not going to mine much Bitcoin on that machine. So, this day and age, we are, seeing, I would say, proper businesses where their business operations is we are mining Bitcoin. And in that context, you have a operating business, and in principle, it's very easy to go, well, actually, I've got a warehouse where they're held. I can deduct that. The electricity that's going into that, the same way that if I had an office with a load of people in, I would deduct the electricity cost of that office. I would deduct the electricity cost in generating the Bitcoin or what have you. So I think when you're operating solely as a crypto-based business, so you are a Bitcoin mining company, it becomes a bit easier to directly attribute costs. If you're an individual that says, well, I'm an individual and I work from home, and while I'm working from home, I've got a computer over there that is mining something, probably not Bitcoin, but something. How do I then deduct costs from that? It becomes even more difficult than home office, because at least home office, you can go, well, I use this one room. I've got 4 rooms. Therefore, I'm going to take 1/4, for example. If you've got one little computer in the corner of that 1/4 of your house, all of a sudden it becomes quite challenging. So it's just about weighing up those circumstances and trying to understand. But again, we'll walk people through the most effective way for them to do it and help them get the maximum they can claim on these things.
If you were like a business, you're trading as a mining company, I'm presuming that's then just reported as revenue and income into the business.
Yeah, correct. So your business whereas my business operations are, I do consultancy advice, whatever you want to call it, accounting work, and I generate revenue from that, professional services, and that's my revenue. My costs are typically my people, my office. I'm left with a profit. In the Bitcoin mining case, my revenue is the Bitcoin that I've been mining, and my costs are going to be my warehouse or my electricity, maybe some write-off of some of the assets that I've purchased, all those bits and pieces that kind of happen in that business. Is, again, we're applying the same principles as a traditional business.
Let's talk a little bit about staking, because right at the beginning, I think, of our conversation, you talked about the benefits or the potential benefits of it for you doing that as a company.
Yeah.
How, in terms of tax on that staking, is that as an individual, that's miscellaneous income tax?
Yeah. So, I guess the only thing I would say to it's miscellaneous income tax. It's only miscellaneous income as an individual because there's nowhere else to put it, because HMRC don't have a specific area for it, right? They could come out with a specific area that was income generated from crypto operations, for example. So, miscellaneous income as such is taxed in the same way that other income is as an individual. There are a few differences to that, but in the main, and I would say in a way it's the same here, right? So again, if my operations are an accounting firm or a marketing agency or I'm a builder, whatever it may be, and I've got some crypto that I stake, and I'm earning my normal income is 10 grand a month, and I'm earning 500 quid a month or £1,000 a month from my staking operations or my staking situation. Typically, what I'm going to put on my accounts is building revenue or professional services revenue, and then underneath that I'll probably have something like other income or staking income or something like that. But the same rates will apply. So when I'm then calculating my tax at the end of the year as a business, I'm going to say, well, my revenue from my building operations or my professional services was this, plus my crypto income, so my staking or what have you. My total revenue is this. Deduct my costs, brings me to a profit. So in principle, whilst yes, you probably would categorize it slightly different, so you could differentiate between the two. As far as HMRC are concerned, they're just going to bolt that together, deduct off all your costs, and tax you on the profit at the end.
As an individual, I mean, it's embarrassingly low for me, but miscellaneous income, there is an allowance, isn't there? It's £500 or whatever it is.
Yeah. Yeah, I don't know if it's changed. It used to be 1,000. I don't know if it's changed, but yeah, there isn't that same. And again, it comes back to with an individual, you have a small amount that bank interest you can earn that is tax free before it becomes taxable. That doesn't apply for a business either, and the same here. That this kind of miscellaneous income, doesn't really apply. It just all kind of get bundled together in one figure and taxed accordingly.
Oh, that's brilliant. Yeah, thank you. So maybe to end, we can. It's a bit of a depressing end. I was going to go on the disadvantages. I thought, what a way to end on disadvantages. But we started with advantages, or why would you? Maybe why wouldn't you would be.
Yeah, and we can reframe that, because this is not a negative. This is actually it's better to do this than it is to do this. So it's not, whilst I get what you're saying with that, I think let's not look at this as a negative. Let's look at this as why would it be better to do this rather than why would it be bad to do that. So there's a few different things. We talked at the start about potential tax benefits. There's also the opposite potential effect. It could be less tax efficient. It could cost you more. People sometimes don't realize that. And they don't realize, for example, that they don't get that 3,000 allowance or, the 500 or 1,000 or whatever that's in the miscellaneous income. So they might look at it and go, well, I'm going to put it in a company. It's easier. It's all in one place. But actually, it's not tax efficient for them to do so. It can also be quite hard to prove that those funds are the company's funds and not your own funds, which can cause complications, especially if you are planning for them to be in the company and HMRC say actually they're individual and you've planned accordingly and the tax rates then fall against you. And the reason for that might be that if you've got a self-custodial wallet on MetaMask, there's no KYC on that, as you know. So I can spin up a MetaMask wallet right this second. So what's to say that the company owns that, or I own that, or my friend owns that, or whatever? So there are things you can do. You can put board minutes in place. You can, you can document these things. The assets are held on that wallet are for the company, but it is a little bit more tricky for someone to prove. It can be more challenging from a KYC perspective. So if you're trying to onboard with an institution, it typically is easier if you're an individual. You just scan your passport and your driving license and, typically people are accepted. As a company, you might have to, especially if you've got multiple shareholders, you might have to provide multiple people's information. Some institutions will not onboard businesses. They'll only onboard individuals because the risk is lower, for example. So there's potentially those. We talked about having multiple shareholders. So security of those assets. If you hold it in a company and you've got 5 shareholders, how are you going to maintain security over that? Are you sharing it proportionately? Have you got more than someone else? And then finally, I would say potentially, which is probably ending on a negative for me, is your accounting costs might be higher. It is more complicated. There are more rules, if you like, around a company. There are more filing requirements and things like that. So typically for an accountant, it is more expensive, for a company than it is for an individual. So again, weighing that up versus the tax benefits, you might go, well, actually, it's too costly to do that. There's no point. So yeah, so I'd say they're probably some of the main ones that I can throw about. There may be some others, but yeah, they're typically the ones that we would talk to people about before they make that decision.
Wow, that's amazing. I just want to say thank you, Joe. Thank you for jumping on. Thank you for read some gems. Yeah, no, just thank you.
No, you're welcome. Thanks for having me and this opportunity for people as well. So really good to share. Hopefully I didn't get too technical and hopefully we've still got some people awake.
Yeah, no, definitely. I'll book you in for next week as well.
If you've got insomnia, let me know.
Yeah. All right, brilliant. Thank you, Joe.
So that ends this video on holding crypto as a company rather than as an individual, and hopefully that's helped. But do look out for the other video as part of this series where I asked Joe some more questions. It certainly is a bit of a minefield, quite stressful and certainly complex, knowing exactly what to do to minimize your tax burden and hedge against risk. So having someone there who's qualified, experienced, and knowledgeable in the field can save you a lot of time. And I'd like to thank Joe for giving up his time and sharing his expertise here. And if you are interested in getting specific crypto tax advice with Miner or Nefos, then you can contact them directly using the link in the description to this video. which will take you to an online inquiry form. And you just need to add my name and YouTube channel in the box there, just so they know where you've come from. If you do have any other questions about crypto tax or holding this in a limited company, please do add them in the comments to this video, and we'll do our best to answer them in a future video. And if you are interested in more of a tailored approach to your crypto education, and you think you'd benefit from having someone look over your shoulder and guide you on your journey, I do offer one-to-one coaching to those who have the desire and the means to educate themselves further. And there are links in the description where you can message me and book in a free video call to see if we'd be a good fit. And if you found this content interesting, please do like the video and subscribe to the channel, as it really does help. And have a great day.